Hi, my name is Lisa Willis, and I am a licensed life insurance broker. So, today we're going to discuss what is a limited pay when it comes to life insurance. Limited pay. So, let's get into it. So, usually, when you go to look at purchasing a life insurance policy, many times we are not made aware of that they do have what is called limited pay. What this means is you can decide if you want to pay, normally it will be a 10-year, 20-year, or up until age 65. So traditionally, when you get a life insurance policy, you will have a premium. This is your monthly payment. So you'll have a premium and you will pay on this for the duration of that life insurance policy, which usually the maturity date of the policy can run up until 100 years. Yes, I said it. You could be paying on a policy for up to 100 years. So many people don't realize that you can limit your payments. So you can choose from a 10 pay, a 20 pay, or up until age 65. So let's break that down. Your 10 pay, you're condensing these payments 100 over 100 years, you're condensing it down to a 10-year term, basically. Not that this is a term policy, don't get me wrong. This is a whole life policy we're talking about, but you can limit the payments to, let's say, 10 years. So that means that the payments will be higher, but you will pay this policy off in 10 years. And then the policy will last, your whole life. Then you can do, now the 10 pay usually works very well with kids, I find, because with a child's policy, the payments are so minimum that you can double that up and it can still be a reasonable price. So those work very, very well with children. You can do a 10 pay. The premiums will be a bit higher than if you just did regular, but you will have it paid off in 10 years, and that policy will last that child's whole entire life. Then we have 20 pay. 20 pay are usually good for, like, if you're in your 20s, 30s, even 40s. You can pay on it for 20 years, and then after the 20th year, the policy is paid for and it will last the remaining of your life. And then, of course, you can have up until the age of 65. That's usually your retirement age. So you can have it where it's calculated that you can make payments and it'll be paid off when you turn 65 during your retirement age. Because normally you make more money in your working age. And then when you retire, you probably don't make as much money as you were when you were working. But hey, some do. But anyhow, you don't have to continue making payments on your life insurance policy. It can be paid off or paid up at the age of 65. So these are really good information to know, just so that you can be able to decide. You don't want the insurance agent to decide for you what's best for you. You want to be equipped and knowledgeable so that you can make the best decision for yourself. So again, limited pay. You can pay on a policy for 10 years, 20 years, or up to age 65. And there may be some other variations. It just depends on the insurance company, but those are the primary limited pay stages. Um, Also, just to give you an example, it's kind of like a mortgage. You can get a 30-year mortgage and pay on your house for 30 years, or you can get a 15-year mortgage and pay the same house, same amount, but you can pay it off in 15 years. But with a 15-year mortgage, your payments are going to be higher because it's condensing 30 years into 15. So that's the same concept as the insurance policies. So I hope this has been helpful. And if you feel like this is some information that will be good to share, please share this information with others, share my video with others, and send in your questions. I love talking about life insurance, and just want to make sure that we are equipped and knowledgeable before we go out and make a lifetime purchase, which a life insurance is. Could be a lifelong purchase until you die. So again, thank you so much, and until next time, have a good day.